The sixth component of a truly diversified portfolio is alternatives. So let's dive deep into each of these. Precious metals such as gold and silver. This is a favorite among many conspiracy theories and doomsday sayers. Some people almost have a religious belief towards gold. Like Warren Buffett, I don't understand its value. Other wealth income streams have outperformed gold and silver and will probably continue to do so. So some of the positives are you have ownership, it's privacy, it's control and ease of use. The negatives is volatile. It does not generate passive income. It is not liquid. There is a buyer and seller that is needed, and it has to be stored, which means it can also be stolen, and there are fees to buy and sell. Crypto and digital currencies. Crypto and digital currencies have been getting a lot of hype lately, and rightfully so, in my opinion. Bitcoin could be considered the new gold standard. I have gone down many rabbit holes with my research on crypto, which is not easily understood by most. The simplest way I can explain what cryptocurrency is, it's very similar to gold or even paper money. If enough people believe in its value, that value will become true. Now think about it. What's the difference between a $100 bill and a $20 bill? Other than having a different color or number to it, they're made from the exact same material. We believe the $20 is worth $20 and the $100 is worth $100. Cryptocurrency is the same. If enough people believe in its value, then that value will become true. The big difference between Bitcoin and fiat money or paper money is Bitcoin has an infinite number of coins, where this stuff is made out of thin air by the Bank of Canada, making this stuff very vulnerable to devaluation and inflation and consumer confidence. Today's inflation and global debt due to government spending is a real concern to your financial independence. Bitcoin could be a hedge against inflation. Cryptocurrency is still in its infinite stage. It's very much like the Wild Wild West. From my research and listening to the experts, Bitcoin and Ether have been through several extreme tests and have passed with flying colors. Investing in other digital currencies, often referred to as shitcoins, would be similar to gambling. You could win big, but you'll lose more often than you'll win. So let's review the positives and negatives. The positives and negatives of cryptocurrency. Positives: ownership, privacy, control, and ease. There's minimum government or banking interference. The negatives is it is extremely volatile. It does not generate passive income. The liquidity of it is a negative. You need a buyer and a seller, and it has to be stored. And in this case, it can be hacked or stolen. And it's still in its infancy stage. It's very much like the Wild Wild West. This is actually considered a positive by many. Now, the Canadian government and the Bank of Canada are exploring the possibility of using a digital Canadian dollar, also known as the Central Bank Digital Currency, the CBDC. Say no to the CBDC. You want to reduce government interference with your hard-earned money, not give them more control of it. There's also hedge funds. Hedge funds, in my opinion, or anything that bets on companies losing, should be illegal. Big fan of Reddit. Go GameStop, go. And then there's angel investing. So angel investing provides initial seed money for startup businesses, usually in exchange for ownership of equity in that company. Angel investors aren't in the loan business. They want to become part of the company. They like putting their money into an idea with the expectation of getting a reward when the business takes off. Now, I highly recommend reading Steve Gedwell's book, A Practical Guide to Angel Investing, How to Achieve Good Returns. And he lists the positives and negatives on this. It's a great little read. The positives are you have that home run potential. You get involved with interesting companies and industries. You can become a mentor to the entrepreneurs out there. And it does feel like you're giving back to the community, helping startups get to that next level. And the networking opportunities with other angels is pretty awesome. The negatives is this is extremely high risk. Most investments are complete losses, and you need to be approved as an accreditor investor that earns over $200,000 a year and having assets of over $1 million. And that's not including your principal residence. All right, so what's the point? Based on Warren Buffett's advice and the philosophy of the wealthy, pay yourself first, 30% first, and live off the rest, 70%, we recommend the following. Your future self account should look like this. A minimum of 10% of your income should go to your future funding where you achieve tax-free, continuously compounding growth year after year. A properly designed dividend-paying whole life policy is highly recommended to those who qualify. You are robbing from your future self if you are not investing today. Another 10% of your income should be going towards self-improvement. Courses, seminars, training, vacations. Yes, I said vacations for self-improvement. Go from good to great. And I usually recommend actively managed low-fee ETFs. And then a further 10% can be invested in whatever you want. You do you. Maybe it's low-fee ETFs, maybe it's real estate, maybe it's savings accounts, or even high-risk rewards such as stocks, bitcoins, or angel investments. This portion should be considered short-term, where taxes and emergencies can be covered.